This is a tax scenario. We have James and Emily Ross are filing a joint return, and they have some unemployment, looks like, a couple of jobs, interest, and dividends. So I'll give you, let's say, about 20 minutes to see how far you can get on preparing their tax return. Chapter 5, Homework 1 is James and Emily Ross are filing a joint return. They have 2 children, Chris and Lisa. They both qualify for the child tax credit. So that means you're going to list them on the dependents section and mark the box for child tax credit. They have a 1099-G for unemployment. Where would that go on the tax return?
Schedule 1, like some.
Correct. And then they have 2 W-2s. And so where would we report the income from the W-2s?
Line 1A, 1040.
Yes. And then you would actually combine them for line 1A. And then the withholding, where would that be reported?
That would be
The 27,700.
7,016 plus 2,056.
it would go on line 16.
Yes, line 16, where you have federal income tax withheld.
No, it's 9,073.
That's what I got, 9,073. Okay, next we have interest income from a 1099 INT. We have an amount in box 1 of 1,520. Where would that be?
Schedule 1, line 18.
Yeah, no, Schedule 1. Schedule 1, line 18 is where the penalty on early withdrawal, the $48 from box 2, would go. So that chart is correct. But the interest income
would go 2B.
Yep, 2B. And because it's more than 1,500, it also has to be reported on.
Schedule B.
Yes. So interest income is reported on Schedule B, also on line 2B of their tax return.
Where would it go on Schedule 2B? Because I was looking
On Schedule B, it would go on Part 1.
over. You would just put the
The interest on U.S. savings bonds and treasury obligations is also taxable. So you'd actually combine these two numbers. And so on Schedule 1, you should have, not on Schedule 1, on Schedule B, you should have a line that says Sarasota National Bank. And the total of these two would be 1,760. And then finally, they have a 1099 DIV. Where would we report the total ordinary dividends?
that goes on 1040. 3A.
3B for the ordinary dividends. Qualified dividends is the full same amount, so 3A and 3B, yes. And because it's more than 1,501, it has to also be reported on Schedule B in Part 2 or for ordinary dividends. Okay, so now that we know where everything gets reported, we can take a look at the actual tax return. And so don't worry if you didn't get through the whole tax return. So here we would put their names and social security numbers in the heading, their address, make sure this is their mailing address, city, state, and zip, mark the box for married filing jointly. Then under dependents, we list the 2 dependents and their relationship to the taxpayers. So it didn't say whether Chris was a boy or a girl, so I just assumed. Lisa is probably a girl. It sounds like a girl's name. So One's a son, one's a daughter, and that'll be relevant when we talk about child tax credit. So we added up their income from the W-2s, and we got $62,033. Their total interest is $1,760. Their total qualified and ordinary dividends, both $1,632. And then we had to do Schedule 1, which is down here. $2,645 from unemployment compensation, which was their only additional income from Schedule 1. So the total income, hopefully we got the same amount, $68,070. And then the adjustments income comes from Schedule 1, Part 2, where we have this penalty on early withdrawal of savings from 1099. $48. So see how that works. The bank took back $48, but we still counted as income, but then we subtracted back out separately. So their total income is adjusted gross income is $68,022. You look perplexed.
Yeah, I made a mistake somewhere.
It's possible that I made a mistake also.
No.
Okay. All right. So we subtracted $48 to get $68,022. This is good practice, even though it's going to be error prone, just to see how the flow goes. Of course, if you're doing a real tax return for a real client, you're going to be using a computer,
Right.
but you're going to want to be able to review the return and see this logic and see how it's coming out. Because if you look at this guy's return and the computer says, "Oh, you made $168,000," and they're like, "No way that we made $168,000." You need to be able to review the paperwork to see where that error might have crept in. So we take their standard deduction of $27,700, and we get their taxable income of $40,322. Now, because they have qualified dividends, remember qualified dividends are taxed at a lower rate than your ordinary income.
And that's 72,000 for wages.
You're absolutely right. See, that's why we don't do taxes by pen and paper anymore. 55,689 here plus 16,344 here, 72,033. So I'm off by 10,000. But they have these dividends that are taxed at a lower tax rate than their ordinary income. So what we need to do for that is, and there's actually a worksheet, capital gains, qualified dividends, capital gains tax worksheet, and I think there's an example in your chapter 5. But really it's more complicated than it needs to be. What you can really just do is, this is their total taxable income. But how much is supposed to be taxed at a lower rate? 1,632 is their qualified dividends and long-term capital gains, which is taxed at a lower rate. So this, if we subtract one from the other, we get their ordinary income. So the ordinary income is taxed at ordinary tax rates, which is why we call that ordinary. And if we look at the tax table for 48,690, yep, that's what I get.
How much is it again?
5,401.
Okay.
And then there would be long-term capital gains at 10%, but happens to they fall into that category.
Well, their taxable income is $50,000. Capital gain tax rate for married filing jointly is 15% if their taxable income is for joint 89,250 and 553. So below that, their capital gain tax rate is 0. So there'd be no tax on their qualified dividends because they're under the $89,250 tax threshold. Okay, so we add 5,401 to 0, and we get this is their total tax. Their total tax was 5,401. They're going to get a $2,000 child tax credit for each qualifying child under 17, which is going to reduce their tax from 5,401 to 1,401. Withholding, do we get 9,073 for their withholding? So 9,073 minus 1,401 is their refund, 7,672. That's how that tax return comes out for them.